What's going on, guys? Well, today we're going to be reacting to a piece of news that just came out this week. Starting May 1st, today's May 4th, you get to actually pay extra when you close on a house if you have good credit. That's right, you get to pay extra. Why do you get to pay extra? Well, let's jump into this video so you can check it out. Before we do, hit the like button for me and check out the links in the description and comment section for some discounts and the prop firm I trade with. Let's go. All right, guys, so here it is. This is going to be fun. New mortgage rule begins May 1st. Today is May 4th, so this has already started. Let's go ahead and hear what they have to say.
Is live in Rogers to explain these changes. Paul.
Well, yeah, guys, fees for loans that are backed by Fannie Mae and Freddie Mac are coming with some new changes. Now, they're designed to get some first-time home buyers into the market, but for others, it could have a negative impact. Buying a home comes with lots of fees. Those fees are based on things like a borrower's credit score, down payment, and type of home. Well, starting today, changes to Fannie Mae and Freddie Mac's fees structure could mean people with better credit scores may pay more in fees, while those with lower credit scores will pay less.
So that's already crazy, right? Like they just said people with good credit scores are going to pay more in fees and people with bad credit are going to pay less in fees. That's insane. Typically, the higher risk trade is the one that gets paid, that charges more fees, right? But that's neither here nor there because that's what they're going to do. Now, another change that happened recently with these government-backed loans is that if you go out and purchase a home, okay, you got to wait a whole year to refinance that home. So you can't refinance it within the first 12 months. Let's say you go out and you buy a house, okay? You remodel it, you fix it up, you make it all nice and neat, and then all of a sudden you get a better job opportunity, so many hours away that house no longer makes sense. Well, before you could have said, okay, you know what, I'm just going to refinance the house, take my equity out of it, and then go purchase another home closer to work, and I'll just rent this one out. As long as that one covers its expenses, then I have two houses, and that's good. That's an investment, right? If it's making a profit, even better. Now you can't do that. Now you're going to have to sell that house if you want to get that money out of there to go purchase that next one because you can't refinance that house if it's a federally backed mortgage that you have. You're going to have to wait an entire year before you can refinance that and tap into that equity you have. So they did that and they screwed us, all of us, with that. And now they got this cooking.
They want to make sure that the housing market is available to lower income earning, lower credit score, first-time home buyers.
Yes, because lower income people, okay, are going to be able to afford the house to begin with. Look, the freaking real estate market's insane as it is. Another thing that they're not taking into account is just because you can afford to buy a house doesn't mean you can afford to maintain a house, okay? Look, perfect example for me. Last year when I came back from the Keys, the AC unit in my house took a dump. Done. Poof. Gone. Right? Actually, I was still in the Keys. It died. I had to have that replaced. There was no landlord I could call and tell him, hey, the AC broke, my man. I need you to go replace it. I have to replace it. It's my house. It's my HVAC unit, right? So, yeah, you can maybe afford the mortgage payment, the taxes and insurance, but can you afford when the HVAC breaks? Can you afford when the water heater breaks? Right? Can you afford when you need a new roof? Can you afford to fix things like a broken pipe? Can you afford to maintain that house? All right? Can you afford that?
The new rules only apply to loans backed by Fannie Mae and Freddie Mac, but that makes up 60% of all new mortgages, according to the National Association of Realtors.
Those who were lower credit scores, they are now in a better position to get a better interest rate on a home, whereas those with higher credit scores in certain minute areas, it can adjust their interest rate a little bit higher than what it was before.
WAC says because of the changes, the advantage of having a credit score of 700 or higher and making a larger down payment is not as big as it used to be.
Really, it's the risk threshold of when they're putting between 5 or 10% and 20% down that had the bulk of the changes.
And for those with credit scores below 680, which WAC says represents a bulk of first-time home buyers, the new loan level price adjustments will open a door that had previously been closed.
It's more about making sure that they're evening that playing field for lower tier credit scores to be able to still afford buying a house.
all they're really doing is basically setting up a lot of people, not all of them, man, because look, anybody can get low credit like this. The blink of an eye, just miss a few payments and bang, your credit gets slapped up. Believe me, I know. But most people that have lower credit for a reason. Generally, they have financial issues, okay, or they don't know how to manage finances. They overspend. They don't know how to use credit. A number of things, number of scenarios. Most of them can't afford to maintain the house. So they're setting these people up for failure, because what's going to happen? Those houses are going to get all slapped up. They're not going to paint them. Those things are going to break. They're not going to know how to fix them or when to fix them or even afford to be able to fix it for the most part, okay? For the most part. Now, it's not a generalization where I think, oh, people with low credit just can't swing it. No, man, anybody can have low credit. But you know what? Go through the process, fix your credit, and then be rewarded for paying things on time, for managing your finances correctly. There's people who have done that. I know people who have done that. This is the other day we were talking with Jono, my business partner. My guy did it years ago. He had garbage credit, and he improved that credit tremendously over the course of a year or two, right? Because he worked at it and he got it fixed and he learned. That's how you do it. That's how you win. What are they doing to these people? They're setting them up for failure. They're telling them, oh, you don't know how to manage your money? It's perfectly fine. The people who manage their money properly, the people who have good credit, right, you and me, they're going to go ahead and they're going to help you out and subsidize it. No, fool, why don't you subsidize it yourself out of your own damn pocket? Why are you going to make us pay for it? You know what I'm saying? And that's what's happening right now. That's literally what they're doing.
And Wax says if you happen to be shopping for a home right now, consult with your lender to make sure you're getting the best bang for your buck. Live in Rogers, Paul Petit, 4029 News.
I tell you who's not getting the best bang for the buck. It's us. We're not getting it. You know what I mean? We're not. And then these people, they're setting them up for failure in that now they're going to be able to buy a house that maybe they can or maybe they cannot afford to maintain. And worse yet off, they're not teaching them how to improve. They have no incentive on how to properly increase their financial knowledge and improve their financial situation. No incentive at all. None. There's no incentive for them, because before they were like, oh man, I got to improve my credit. You know, the one that who wants to think, I got to improve my credit so that I can purchase a home or purchase possibly some investment property, right? How do I invest? How do I improve my credit? Let me go search on Google. Instead of going on Facebook, right? Or instead of going to catch up on what the Kardashians are doing, let me go on the internet and let me find out how to improve my credit so that I can purchase these things later with good credit. That incentive is now gone. It's no longer in existence. So in my opinion, all this is going to do is in the long run, it's going to have people with garbage credit who maybe in the past would have been like, oh, let me go search how to improve my credit. Now they're like, oh, I don't have to do that. I don't have to do that. People who have good credit are going to subsidize my loan anyways. This is not how you improve the economy, guys. Well, guys, what do you think about that? Leave your comments in the comment section. I really want to know your thoughts on this topic and what you think. How do you think this is going to evolve over time? What it's going to look like? How it's going to change the landscape? All right, the financial landscape. Let me know what your thoughts are. Thank you very much for watching. Remember, I stream Monday through Friday at 9:15 a.m. I'll see you there. Peace.